Hello guys, in this video, since we have spoken about IPOs before, which is companies that get listed into the exchanges. Now these companies, they got a lot of money because when they were private, they were very small. That's why they want to go public. So for what reason? Is because they can get money for free. Understand that it is for free. That's why they go to stock market. Now, if the company, let's say a small company, it has, for example, 10 stores. Okay, 10 stores in a small town or a city, for example. And this city, they know this is a store because there are 10 or 20, they know about it. But other cities, other states, they don't know. Okay? So how this company becomes IPO and how it becomes very big and known to all states. And then it becomes international. How? It's just because they need a lot of money and they don't like loans. Because most of these companies, a small one, they have loans. And these loans have interest rate. So this interest rate kills the profits. And always they have to deal with these debts. But when they go to become public, what will happen? Since they got millions and millions, some they get billions of dollars at the same time, they pay their loans, and then they begin to make more stores. And when they make their more stores, they become more famous and they have more money. That's why these companies become from one city, it goes to all cities of America, all the states, and then they go international. And here in America, we have a lot of IPOs that you find them in almost all the countries of the world. You take Walmart, for example. You take McDonald's, you take Exxon, for example. There are a lot of other companies, Costco, other companies that are big. But for you, what is the deal? For you is you can check these companies. Some private companies, they are very famous. Okay? Before they are very famous, it means famous people, they know them. For example, Facebook, Twitter, other kind of companies that are known before, and when they come to the market, sometimes they succeed. Okay? Because they were known before, so when they go to the stock market, it means all the people will know them more. So it's like a free advertisement for the whole America and the whole world. That's why, for example, you see companies, they become famous and they were known all over the world. Now here I'm not saying they make money or they don't make money, but I'm speaking about advertisement. They become too much known and everybody knows them. So for you, if you want to follow this kind of stocks, try to see the IPO calendar. IPO calendar is very easy. You just Google, you put IPO calendar, you click on that, you will see all the companies that are going to be IPOs this week. It means the launch. And when they launched these companies, you can just put a portfolio, the stocks that you like, maybe you know them before, maybe you search about them, and see if these companies, the few weeks, they grow and they go up, it means they become like gold nuggets. I'm telling you, I showed you before this stock, which is Square. Square was only $11 just a few months ago. Now it is, I think, $94. It goes to $99. Now these stocks, almost all the people, if you follow things, you will find these stocks when they are cheap. It was $11. You can buy it at $15, $20, $30. But still they are going up. Okay? And you should try, because you shouldn't wait. There are some IPOs that if you wait only 1 month, it's over. If you find something good and you say, oh, I will follow it 1 month or 2 or 3, and then I will buy it. But the stock is $10, now it is $50. How can you buy it now? It's over. Because opportunities doesn't wait for anybody. When the opportunity comes, you should buy and wait. Now, avoid companies that they go down the few days, they begin to go down. Avoid them. Because if they continue to go down and you buy them and you think that they go up, this is a bad strategy. Never buy companies that are going down until they go up again and form a trend. So here, but this could be taking 1 year, 2 years, 3 years, 5 years maybe, until these companies go back and reverse the trend, and now they are profitable. But what I'm speaking in this video is just the companies at the beginning, they are doing good. Few days they are doing good, and they continue to do good. And this is what we are looking for now. You can put them, you find the IPOs. You can even wait for them the day they open. Don't buy. Leave them for a few days and see. If they go up, you can buy. This is just a strategy that if you have only one that it is good, even if you do 4 or 5 or 6 that are bad, you lose a little money. But if you do only one which is good, you will cover back your money and you make a profit. And believe it or not, some stocks do miracles, because a lot of people they buy them and under recommendations, or under some websites that they give recommendations, or TV. Sometimes TV, they make a bubble. What does it mean? It means they push people to buy because they have owners before. They bought it so cheap. Understand that there are some people, wealthy people, they don't buy generally from the market, from the public. They buy before, when it was IPO, when it is very, very small money. Let's say the stock is $10. Okay? But when the market opens as an IPO, the first day, let's say it is $20. So these guys, they have doubled their money, the rich or the wealthy. Now, you ask yourself, why for me they don't let me buy like them? It's just because you don't have money. And understand, in America, if you are rich, you have opportunities to make more money. That's why they say always, the rich becomes richer. This is the nature of business in America. Okay? If you, for example, let's say any stock, like an IPO, before the launch, it means the first day in the stock market. Okay? Before, the price is so cheap. But only the wealthy people, big institutions, all these kind of people, they venture and they buy when it is cheap. When it opens, it's already expensive. Now, there are some analysts, some mutual funds, they buy before. So what they do, they pay money, they pay. It's like lobbying here in America. Lobbying. It means in politics, some rich, they push the politicians for certain rules or certain things that favor their business. Okay? So it's like this. It means, and understand that money brings money, and the rich becomes richer. Now, we as the public, we buy from the market, the real market. But to buy cheaper, you should be very, very wealthy. A broker, for example, if you have 1 million, 5 million, $10 million, the broker, you can ask your broker, okay, are there any do you have any IPOs shares? And then if he has, he can sell you some. Okay, when the prices are so cheap. Because this is how the Wall Street, they make their money. They make their money before the other people. A sure thing. Okay, that's why you ask always, oh, is there a sure thing? Sure things is for the people who have money. For the public, you should risk your money other ways. Okay, and believe it or not, don't be so excited when there is an IPO and you say, oh, I will buy from the first day. Don't buy from the first day. It could be the second day or the old days or 6 months, 1 year, 2 years, 5 years, going down, and you lose a lot of money. This is not a strategy that you should do in order to do with IPOs. IPOs, if they go up for a few days, you can buy and you can wait. If you succeed, that's the good thing. But if they are going down, never buy them until you see another trend coming. And this is how we buy. Most of the time, this kind of stocks, with my strategies, you find them easily. You find, for example, if you don't want to see the IPO calendar, in my search, there is 1 month, 3 months, quarter, it means 1 year, 2 years, 5 years. It will show you the IPOs that are good to buy, and just you buy and you wait. And this is the good thing to minimize your, it means to make it easy for you. You will find all the possible IPOs in the market that are good to buy now for that day. You can do it next day, the other day, the other day. Now, if you know a sector, let's say you are a doctor, you are a nurse, and or a pharmacist, it means it is your sector and your job related to this. It's very good to know these companies. Maybe you have better idea than someone who doesn't know all about drugs, about medicine, and so on. So this is your opportunity to make money. But there are easy things to find, to search, than to put the whole stocks into a portfolio and you watch them daily. Because IPOs, they come each day. So there are a lot. Few of them, they succeed the first days. Most of them, they go down. So avoid those that they go down and never buy them. Even there is a recommendation online, they say, oh, buy because they are the best company. Now, if the stock is going down, it means that it is not good. Okay, and if you stay and they tell you, oh, just invest, never invest in IPOs when they are going down. If they are going up, yes, you can make a choice. But if they are going down, understand that they are losing money. If they are losing money, you will be losing money. Okay? So thank you very much for watching. If you have more questions about IPOs, please ask. And if you have more to share with us, share with us. Thank you very much.